Good afternoon. Welcome into Market Talk for this Tuesday, February 1st, live from the NCBA Trade Show and Cattle Industry Convention in Houston, Texas. I'm your host, Jesse Allen. Thank you so much for joining us and making us part of your day today. You can find us online. MarketTalkAg.com is our home on the web, MarketTalkAg.com. You can find all of our social media links there. Facebook, Twitter, Instagram, find all of our streaming sources and much more all online, markettalkag.com. We're going to be reporting the next couple of days here from the Cattle Industry Convention in Houston. We'll be bringing you updates from cattlemen across the country and the latest updates from the cattle industry as well here over the next couple of days. So be looking forward to that on upcoming episodes of the show this week. But we got plenty to talk about in the market trade today. Soybeans soaring higher, quarter wheat higher as well. A lot of bullish momentum behind these grain and livestock markets today. Livestock had a good day as well. Let's talk about all of it. Let's bring in Bill Biedermann, our good friend with agmarket.net, joining us here this afternoon. Bill, good afternoon to you, sir. And I know you are a busy man, rightfully so, with all of this bullish momentum in these markets. It's been a wild day in the grain and livestock trade, Bill.
It sure is, Jesse. I mean, it's just one news story after another that just keeps pushing it, and the fund money is rolling into this thing. And every day, I mean, you turn on the TV, you can't listen to it for 10 minutes without hearing about inflation. And I think that's pushing some of this index money and fund money back into the commodity markets.
Yeah, and we think about it, and it's the first day of a new month. So of course, we're going to get some of that new money flow into the market, but it seems like it's being done, twofold or threefold even today. Looking at this soy complex, well over $15 in the front months now. We've just seen a big move here in the last couple of days with new contract highs. Bean meal, bean oil jumping in with new contract highs, and a lot of that tied to South American production and the ideas that crop is declining. So talk to us a little bit about the soybean complex here today, what you're seeing there, and some of this latest talk about what we're seeing for crop losses in Brazil, Bill.
Yeah, so USDA went from 144 for Brazilians soybean crop down to 139, and that's where they sat. And most of the trade was thinking 134. The real killer is a 130 type size crop. If you go below 130, last year they had a 138 crop. So you take down to 130. Now you're ratcheting down those world stocks to levels that are in the 90s. Last year, just for reference, we had right at 100 million ton. That was probably overstated by most trade estimates, including ours. But nonetheless, you'd be down there towards the 90 mark. That's a big deal, Jesse. Now you're talking some tight world stocks. And the big dynamic change about that is that now, we're all expecting more bean acres and less corn acres. That's always what's happened historically when we have a big surge in fertilizer price. By the way, I got a quote today on nitrogen at $1,500. So, that story's not going away. That historically has shifted significant acres to soybeans. Last time it was 10 million acres shift to beans, 7 away from corn. And, we don't expect that kind of a shift, but a 3 to 5 million acre increase could be absorbed with what's going on down in South America. Now, today we heard some private estimates that were in the mid 120s. I mean, that is a whole nother picture. So the bean market's responding to this. It's starting to realize that we're going to have to fill the gap and sell some beans in between a short crop in South America and our next harvest. And that's putting some strength under this old crop bean market.
Well, I know as well, we got those private estimates in that you mentioned. We also have China stepping in to buy some beans here as of late for the new crop. And we're getting getting the talk about the Brazil port prices, 10 to 12 cents higher than the U.S. starting in like June. And to your point about exporting small crop beans, I mean, it just feels to me like the Brazilians are, doing their best to confirm that they have a shorter crop by some of those port bids being higher. So, I mean, we look at all this, and I wonder if 1550 is the mark in soybeans, Bill, or if we have room to go higher than that, just based off of all this information that's coming at us.
Yeah, so last year the highest monthly close we had was 1571. It opened up the next month at about 15. 79, and it traded as high as 1677. So those three numbers there are probably going to be pretty critical to most chart people. Honestly, Jesse, when you factor in the inflation thing, and a real key to that is going to be whether or not the feds can act aggressively and start try to reining in this thing with tightening up the system a little bit. If because Putin goes into Russia or into Ukraine, that's going to force the Fed's hand, and they won't be able to tighten. They're going to have to keep liquidity. That would mean that inflation could last longer. It could go on, and these grains would be, now it's getting to the point where people are really feeling the inflation. You're starting to see consumer confidence drop hard, disposable income drop hard. You're going to be able to buy a TV cheaper next month than you did this month. But the thing that isn't going to stop buying on a regular basis is food and fuel. So those are the two long-lasting, last to die, so to speak, inflationary markets. That's where the funds put their money because they know there's inelasticity in food and fuel. So, if you're playing inflation, that's where the money's going. I think that's a big part of what's driving these markets right now. But to answer your question, once you get up into that 1575 area, from there on higher, you're treading some low odds for longevity.
You mentioned Russia, Ukraine. I know that's the other big news item in front of these markets right now, on top of inflation. Like you mentioned, it's South American weather. It sounds like Russian troop buildup on the Ukraine border. Like 70% of Ukraine's border now is got Russian troops on it. And I know this is going to be big for corn and wheat traders. Moderately higher today, I would say, in corn and wheat compared to soybeans, but still, I feel like corn and wheat traders really watching this escalating situation very closely. What are your thoughts, Bill?
Well, I think the reason the wheat market broke hard yesterday, nobody really knows. There was a story that, oh my God, Egypt didn't buy any of their wheat from the U.S. Well, they haven't been buying wheat from the U.S. for a very long time, so I don't think that was the story. I do think, though, that I heard in the cash market that Russia was just tanking their price so that they could get some wheat exports out. And, they export. This is pretty amazing. I'm going to give you a statistic here. The U.S. exports 12% of the world's exports of wheat. Russia provides 18%, and Ukraine 12%, just like us. So, if you talk about how things are going to change dynamically, if they start, shooting at each other, freight rates are going to explode. It's going to get hard to get stuff out of there. So the rumor I heard was that Russia was just tanking their wheat price, trying to get some sales on the books and get it out before things get bad. But if you remove, 30% of the wheat, or even effect, you're not going to remove it. They're going to still ship it. But 30% of the wheat becomes more difficult to get on vessel versus the whole world's supply. That's a lot. And we're at 12%. We've got the commodity where we could provide a lot more than 12%. So it could shift some demand to the United States. Having said that, I would suspect that the wheat market sell-offs are going to be well bought. And until we get sustained moisture out in the plains, I would think that the Kansas City wheat, by all means, has good feet under it. But, not right now. It isn't acting very good.
This corn market with soybeans running higher, you would think corn would follow along to maintain acreage. You touched on that a little bit. Do you think, this corn market, what's it going to take to get this corn market up around 650? Is it just going to be continued bullish strength in this soy market, or do you think we're maybe topped out a little bit in this corn market?
I think it's a spreader's market right now, Jesse. I think it's kind of second fiddle to where all the action is, which is in beans. So they might be buying beans. Maybe they're selling some corn against it. I can't tell you. The corn market literally has more fundamental, underlying concrete footing than soybeans do. If the South American crop is above 130. If it's below 130, it's a whole different story. But going to the corn, we provide 31% of the world's corn. The Ukraine provides 15.5%. So that's pretty significant. And if that has to get shipped over to the Baltic ports, because the Ukrainian ports aren't working right, or the freight rates are like $1,000 a ton, then that's going to be significant, and it's going to shift some stuff to us. We have no idea what the South American second crop of corn is going to look like. I mean, they're just planting that. So, we got a long ways to go. We've got until the March acreage report in the United States and May weather before we really have a good handle on where this corn is going. But you said $6.25, I think. That's about what corn should be trading at in order to compete for those acres right now. In our supply demand tables, if we're using a 90-91 kind of number, we had 93 last year. If we drop below 90, Jesse, because of what's going on in soybeans, we're going to have a shortage even with a good 179.8, a trend line yield, like a 180 yield. We're going to have a tough time making a go of it. You cut that yield by anything, and I don't want to say where I think corn could go, but it would be substantially higher. I do think we got to get to that $6.25 area or $6 area at least, just to compete on acres.
Now, looking at these grain markets overall, before we shift over to talk livestock a little bit, if I'm a producer, if I've been making some sales, if I'm looking at these markets moving higher, what should my thought process be here? Should I be locking the floor in, maybe giving myself a chance to re-own a little bit here with just all this bullish momentum? I mean, what would you recommend to producers right now, Bill?
Right. So you're in an environment where we could go another $2 higher in beans, and we could go another $1 higher in the corn very easily if certain things happen with the inflation, where the feds can't come in and start putting the fire out a little bit, or with a weather problem here in the United States after we've seen a problem down in South America. These, or if Russia does invade, and so now some of that Baltic or Ukrainian port is not as available as it normally is. These are big picture stories that you need to think about, and you need to put into your whole marketing plan. I think that someone who is not selling bean prices at this level, or even old crop corn at this level, I think you really have to do a check in the mirror to ask yourself why. These are phenomenal prices. There's nothing wrong with selling this thing and then taking 25 or 30 cents and buying an option back and keeping that upside open. So what if you don't catch the first 50 cents or dollar in the beans? But if beans were to go to some absurd price, and I don't like saying absurd prices, so I'm not gonna, but you know what I mean, you'd participate in even 50% of that rally, you'd do good. But I'm guessing that if it went to an absurd price, you'd capture all but maybe $1 of it.
Bill, let's move over to livestock. These cattle markets looking fairly strong today. We saw that cattle inventory report come out. That was bullish, as we saw a 2% lower number there. Talk to me now that we got that inventory report out. We've started a new month. What are your thoughts with this cattle market right now?
Well, the big concern is going to be the backup of what we saw when they slowed the chains down a few weeks ago, and what effect that's going to have on these live cattle. The product's gotten pretty well cleaned up. We know that, but these weights we're dealing with the weights, and we're going to have to watch that real close. Now, I understand that they're back up to full speed again. Hopefully that'll get real current real quick. I think the demand for beef is out there. I always have. I think my wife's the smartest person, probably the prettiest person in the world, and she says cattle are going to $200. So I'm in her camp someday. I don't know when, but I think there's good upside potential in these things. If they do sell off, I think it's an opportunity to get some stuff bought. As a hedger goes, just keep locking in your margins and going back out there and replacing them again. That's what you got to do. You got to keep those lots full. But Jesse, I think the real key to watching this thing, whether or not, the 2 week out trend is, I think, going to really depend on those weights.
Well, and I think cattle as well as hogs too. The hog market's strong again today. We got summer months well over $100. We're looking at a lot of things happening. Feedlot country. We got a winter storm affecting us here this week. So you look at things like that. And you look at COVID, you look at chain speeds. I mean, there's a lot of factors going on throughout the entire livestock sector that's really giving us varying degrees of momentum, whether we're talking cattle or hogs, Bill.
It really is, and the product is, the leader of everything in the long run, right? I mean, if the consumer is turning to something else and eating vegetables instead of meat, we've got some issues to deal with. But I don't think that's the case. I think the consumer has proven that they can absorb the product that we're kicking out. Even the chicken, product is gone real well despite the price rise. Everything is going well on the counter. It's watching these weights and how they backed stuff up, and if we can get the hoof to be clean, I think we're looking at a solid market all the way into spring.
Bill, any other thoughts you have for us? I know crude oil, we've been watching that market as well. We're back above $88 here again today. Any thoughts there? Any thoughts with the dollar or any other outside markets that you're keeping an eye on right now?
Well, I'm a kind of a macroeconomic guy, so yeah, I'm watching that stuff pretty close. I'm real concerned about if the free market is left with trying to resolve the inflationary issues that are abound around the world, not just here in the United States, but this is a worldwide problem. The IMF and World Bank lent money to African nations that have no more sense in borrowing money than my 15-year-old kid, right? I wish I don't have one, but I just made that as an example. My point being is that we've got more world debt, government to GDP debt ratios than we've ever had before. And so this thing is a bubble. You need to be careful. You need to watch what the Feds are doing. You need to watch the bond market. And if the bond market rallies up here because of Putin going in there and we have to back off on Fed action, don't be afraid to sell those bonds and lock in some cheap interest rates, or do that at the bank, because what will happen eventually is the Feds are going to quit buying these bonds, Jesse. And when that demand for bonds leaves, corporations are still going to be issuing bonds. Municipalities are going to still be issuing bonds. And the only way you're going to get my mom and dad, who are real conservative, to go in and buy bonds for a return on their money is to give them 3 or 4%. And that means higher interest rates. And the bond market will go down, the stock market will go down, and we'll pull the bubble out a little bit.
A lot of things to consider, a lot of great information as always, Bill. And I know early in the show you mentioned yesterday's meeting in Indianapolis for the agmarket.net team. I know this coming Monday you guys are in Kansas City as well.
Yeah, we're looking forward to that. Going to go down to the old stockyards and get ourselves a good steak. So we got some great speakers, Jesse. And that's a wonderful town to be in. We got a good crowd coming. We still got the door open for a few more, so feel free to get a hold of us and come on. We got great speakers. The guy David Hightower is one of my good friends, and he's just one of the best economic presenters I've ever seen, and he'll be there.
Well, I know folks can find the full lineup and details agmarket.net. You can get contact information to get a hold of the agmarket.net team there as well. You can also download their app in the App Store or the Google Play Store as well. With that, Bill Biedermann with agmarket.net. Thank you for joining us on this Tuesday, sir. Have a great week. We'll talk to you again real soon.
Thanks, Jesse. See you later.
Bill Biedermann with agmarket.net joining us today here on Market Talk. That's going to do it for the show today from the Cattle Industry Convention in Houston, Texas. We'll be back here tomorrow with more updates from the trade show and the convention. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.